Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. In today's video, I'll share my analysis of historical trends of the ready-made garments and apparel sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The ready-made garments and apparel sector is a major contributor to GDP, employment, and foreign exchange earnings. It includes domestic brands, exports, and a growing e-commerce retail base. Government supports the sector with policies like PLI scheme for integrated textile parks, remission of duties and taxes on export products, a mandated technological upgradation fund scheme, PM Mitra Park schemes, etc. The key growth drivers for this sector includes rising demands for branded and occasion wear, expansion of e-commerce and omni-channel retailing, focus on sustainable organic fabrics, and surge in exports post global supply chain diversification. The major challenges for the sector includes raw material price volatility, intense domestic and global competition, dependency on imported machinery for advanced manufacturing, and pressure on export margins due to logistics and labor costs. So now in order to identify the trends in this sector, I will present two graphs. They are the end result of my analysis of the share price movement of last 10 years of top 10 companies of this sector. The top 10 companies of this sector comprises of 2 large cap, 3 mid cap and 5 small cap companies. The first graph will show the yearly returns whereas the second graph will show the monthly returns. So let's start with the first graph, that is the yearly returns graph. So this is the yearly returns graph. The green bar over here shows the positive yearly returns. The red bar shows the negative yearly returns. The orange line down under here shows the cumulative returns. The green line shows number of months with positive returns, whereas the red line shows number of months with negative returns. So let's start with 2015. 2015 was a very good year for this sector, as the sector managed to give very good returns of 50.57% with 7 positive months and only 5 negative months. But 2016 was a bad year for this sector, as the sector gave negative returns of minus 15.96% with 7 negative months and 5 positive months. In 2017, the sector bounced back and gave very good returns of 49.42% with 9 positive months and only 3 negative months. But in 2018, again, the sector gave negative returns. It proved to be a very bad year. In fact, the worst year of all in the last 10 years for this sector with minus 34.27% returns with 8 negative months and only 4 positive months. 2019 too was a bad year for the sector, and the sector managed to give returns of minus 15.19% in that year with 9 negative months and only 3 positive months. In 2020, the situation improved and the sector gave above average returns of 33.87% with 8 positive months and 4 negative months. 2021 was a dream year for this sector, as the sector managed to give returns of 116.67% with 9 positive months and only 3 negative months. An absolutely dream year for any sector for that matter. 2022 was a lean year, I would say, for this sector, and the sector managed to give average returns of 17.95% in that year with 6 positive months and 6 negative months. 2023, again a very good year for the sector, and the sector managed to give returns of 43.87% with 10 out of 12 months giving positive returns and only 2 giving negative returns. 2024, another very strong year, and the sector managed to give returns of 51.70% with 8 positive months and only 4 negative months. To check out the cumulative returns, if we follow this orange line over here, we can see that in the last 10 years, the cumulative returns is 686.93%, which is just shy of 8x. So just less than 8x returns in the last 10 years. Let's see the key takeaways from this graph. So first is the cumulative return. We have just seen that 686.93%, just shy of 8x in the last 10 years. CAGR of 22.91%. Now, this CAGR is not too good, not worst either, though, but still an average CAGR. If you see, there are several years with very good returns. 2015 with 50, almost 50. 2017 with almost 50. Then with 2024, more than 50. 2023, almost 50. 2021, more than 100. So there were couple of, or rather, 5 6 very good years, but at the same time, there were three negative years as well, and that brings the CAGR down. Let's move on. The net negative yearly returns three. We have seen that there were 3 years which gave net negative yearly returns: 2016, 2018, and 2019. The best year was 2021, without a doubt, an outstanding performer with 116.67% returns, massive returns in that year. And the worst year was 2018, and again, no competition, minus 34.27% negative return in the year of 2018. So, worst year by far. Positive to negative year ratio is 2.33 is to 1. So, not a good number, I would say, for a sector, not a good number. Now, let's move on and see the monthly returns graph. So, this is the monthly returns graph, and the first impression is that so the year starts with negative quarter. Anyways, let's see. The red bars over here shows the negative mean monthly returns. The green bar shows the positive mean monthly returns. The green line shows number of years with positive returns, and the red line shows number of years with negative returns. So January, February, March, all three have negative average yearly return, negative average returns over the last 10 years. January with negative 0.96%, February with negative 2.96%, and March with negative 2.01%. In Jan, 7 years have given negative returns. In February, it's 6, and in March, it's 5. So, not a very good start of the year, I would say, for the sector. But then came April, and April is by far the best month for this sector by quite a big margin. 9.25% average returns in the month of April, with 9 positive years and only one negative year in the last 10 years. Very good, very good month for this year. May, average month with 2.95% returns, 5 positive and 5 negative years. June, another average with 3.41%, 6 positive years and 4 negative years. July, surely an above average month, in fact, a better month with 4.9% respectable returns and 7 positive returns and 3 negative returns. Sorry, negative years. In August, it's a average month with 2.62% returns, 5 positive years and 5 negative years. September, a flat month with only 0.23% average returns over the last 10 years, with 6 positive years and 4 negative years. October, 2, an average month with 2.34% average returns, 7 positive years and 3 negative years. November, though, a bit better than October with 3.29% average returns, 7 positive years and 3 negative years. December, another average month with 2.75% average returns, 5 positive years and 5 negative years. So, all in all, not much happening in this sector as such in terms of returns. And certainly, the start of the year is not good for this sector. Let's see the key takeaways. The cheaper months are January, February, and March, without a doubt. January, February, March, the first quarter of the calendar year and the fourth of the financial year. So Q1, that is January, February, March, the worst of the 3 months for the sector. September 2 is not a good month. 2 can be considered as a cheaper month, I would say. Costlier months, April and July. So April clearly with 9.25% average returns, 9 positive years and 1 negative year. and July with 4.9% average returns. So two costlier months for the sectors are April and July. And finally, the positive to negative month ratio is 1.35 is to 1, which is 1.35 positive months against every negative month for this sector over the last 10 years, that is over the last 120 months. So not a very good number, I would say. Not bad either, but it's just an average number. Altogether, the impression overall is that it's an average sector. So that is all from my side in this video. Thanks for watching it. Let me know in the comment section how do you like it. Press the like button, subscribe to the channel, and share it with your family and friends. I'll be back soon with another video. Goodbye for now.